Good evening, dear colleagues. As always, it's Sunday. I'm Dan Strelkov, and this is the ForexTimes project. Once again, I invite you to join the ForexTimes community, where you can find unique forecasts based on data from the Chicago Mercantile Exchange, CME, and strategic target levels, which you can apply using any trading strategy, as long as it excludes lagging indicators and incorporates Elliott wave theory, specifically triangles as the penultimate wave. Currently, a triangle pattern for gold is published in the community, which I will discuss today. Additionally, tomorrow, a triangle for another trading instrument will be posted, and you can learn about it by joining the ForexTimes community. I would be very happy to have you join. Now let's get into it. For the euro, based on the data from the Commodity Futures Trading Commission, CFTC, we observe a decrease in the number of buyers by just under 1% and a 1% drop in the instrument's capitalization down to $239 billion and $1,883 million. This suggests a likely continuation of the corrective decline for this instrument. Therefore, if you're eager to enter the market on this instrument, I suggest applying the Fibonacci extension tool, and you'll immediately see the target range, specifically the 100% and 161.8% Fibonacci extensions at levels 1.0870 and 1.0980. However, for some reason, I have a strong desire to buy the euro, and I'll explain why. The strategic target level of 1.1350 is above, where you can see significant clusters of option contracts worth $71 million, $200 million, and $57 million. These are hedging call options that reflect the maximum open interest by professionals in Chicago, who hedge their futures sales. Interestingly, the hedging put options are positioned above the current price, acting as a support level that generally moves with the price, supporting it at key levels. At the moment, the maximum open interest for put options is above the current price, indicating that after the euro's corrective move down, there's a strong likelihood we'll see a test of the strategic target level at 1.1350. And now, pay attention. Dear colleagues, in the broader sense, the euro is, of course, looking upward because there is a high probability that we are seeing a triangle, which we entered through a flat wave. This flat wave is actually the CDE triangle. And right now, we are breaking out of the triangle in a bullish direction. However, there's always a but, and in this case, the but is that where there's a triangle, there is always room for a simple correction, let's say a human correction, in the form of a wave, followed by waves A, B, and even C, or more accurately, a WXY correction. The most interesting part is where wave C could potentially head, and that could be somewhere around the 1.04 to 1.05 level. If we look at the monthly option contracts for this level, we are in for a big surprise. At the 1.04 to 1.06 range, there is a cluster of put option contracts worth $4 billion. Moreover, take a look. At the moment, the hedging level for put options in the monthly contracts has shifted to this very level. To be clear, this is the 1.05 level, and that's why I believe it's entirely possible that we could see a decline in this instrument. We may even witness it drop sharply. However, what interests me most is the changing expectations of professionals concerning the maximum open interest in put option contracts, because right now I have doubts about a sharp drop happening. On the contrary, I think we could see a small decline followed by a surge to a new local high, and only after that, a possible downward movement. These are the scenarios we are facing, but as I always say, you should trade only based on patterns and manage your stop loss levels properly. Make sure you're calculating the size of your positions based on your stop loss and risk management, which should always be a percentage of your account balance. So friends, at the moment, selling may seem relevant, and I've outlined the target range for you. However, I won't be selling. If the price reaches this target range and I see a pattern for a buy, I will buy with a target of 1.1350. After reaching this target, I will closely monitor the situation, and if a sell pattern forms, I will sell with a target of 1.05. That's the plan, my friends. Gold, a very similar situation to the euro, but with a higher probability of decline. Let's take a look at what's happened over the last few months, say the last 6 months. We saw an impulsive upward movement, which likely formed into a triangle. The triangle is the penultimate wave, and right now we've broken out of it in an impulsive move. This has formed a terminal diagonal, or a diagonal triangle, indicating the end of this movement. Therefore, the penultimate wave of the triangle, along with its midline, becomes a very strong strategic target level. The strategic levels for gold are published in the community. Please take a look. There are 2 or 3 levels available right now. Looking at the H4 time frame, we can see a likely impulse forming, and after a correction, you can confidently start selling. Professionals have given us some excellent clues at various levels. $700 million, $400 million, and $683 million at the levels where we already see large clusters of put option contracts, specifically at 2,450, 2,425, and $2,400. These are 3 target levels for us to consider selling. However, there's a slight catch. If you set sell stop orders right now, there's a small chance that the impulse hasn't fully formed yet. We may see waves 1, 2, 3, 4, 5 play out. Your sell stop order could be triggered, but then a correction might follow and your stop loss might get hit. But don't worry, friends. After that, we'll have an impulse, a correction, and another opportunity to sell with a pending order. This is capital management in action. Proper capital management is key to profiting from the market. I'll repeat it endlessly. Capital management is the most important thing. There was even an experiment a few years ago, maybe it was repeated recently, where people flipped a coin for an entire year. Heads meant buy, tails meant sell. Over the year, they ended up with a small profit simply by flipping a coin. But they managed their capital well, set proper stop losses, calculated the size of their orders, and carefully decided how much of their account balance to risk on each trade. They didn't lose money after a year of flipping a coin. And we, unlike them, are not flipping coins. We are trying to, let's calculate the strategic levels that the price is likely to reach, using data from the Chicago Mercantile Exchange and the Commodity Futures Trading Commission, while also incorporating Elliott wave theory. So, like flipping a magic coin, friends, manage your capital wisely, and you'll be on the path to success. S&P 500 index. Regarding the S&P 500 index, there's nothing particularly complex here. There's a high probability that the 5-wave structure of the S&P 500 has already completed, and a correction is currently underway. This correction may have already ended in waves A, B, C. Any impulse move upwards after a correction can be worked on with a buy stop order. Alternatively, we might still see the continuation of a downward movement. In that case, we would see an impulsive move down in wave A, followed by wave B, and we could trade the sell side accordingly. This is my plan for the S&P 500 index right now. But as you know, I'm convinced that for the S&P 500, it's best to focus solely on selling, particularly from an investment perspective. Even if the index rises to a level, which I'll mention shortly, around 5,970, it won't matter much. In terms of long-term investment strategy for the next year to a year and a half, it's crucial to look at selling opportunities. I believe that selling should be the focus. Join the ForexTimes community. As always, I invite you to join the ForexTimes community, where you'll find many strategic levels that you can work with using virtually any strategy, as long as it doesn't involve lagging indicators. That's all from me. Dan Strelkov and the ForexTimes project. Have a great evening, everyone.